The S&P took a pause today, down 0.11%, closing at 6198.01. We've been hovering just below the big 6200 strike. That is the largest gamma exposure concentration currently, and we've seen some consolidation over the last couple of trading sessions around this strike price. You can see here on the 15-minute chart, we've been hugging this 50-period EMA. We're still above it, but it does look a little precarious here as we've been consolidating sideways over the last 2 days. But taking a step back and looking at the bigger picture on the daily candlestick chart, we have broken out to new all-time highs, and we are maintaining above this big resistance zone that goes all the way back to last year. This is something that we've been watching for. We want to see multiple closes sustain above this resistance level. The gamma exposure picture on a total options chain basis looks higher. It's continued to skew to the upside. However, I will say that volume has been really light lately. There could be potential selling pressure coming in as some market participants take profits. We could also see some dealer selling pressure from this 6,200 strike kick in at any moment. And so there is the possibility for a 3 to 5% pullback. From our view, we are continuing to maintain hedges. Currently, our hedges are right around the 6,000 strike. We're using both SPX and SPY across our different portfolios in order to hedge. And so this is basically our hedge zone here, with price re-entering this congestion zone.
Thanks, Anthony. Let's take a look at QQQ, which might be a little bit of a red flag today. While most indices were positive, QQQ was down almost 1%, down 0.85%. And this is happening from the upper dealer cluster zone, which is at 550. I will note a positive that we have seen GEX grow at 560 and 570. Just looking at the Keltner channels, which are at the same spot as the price currently. So with the upper Keltner channel rising, it eventually will meet these upper GEX clusters at 560 and 570, but the problem is it may take some time for that to happen. So we may need a little more time before we see these higher prices. We also see the whole moving average at 540, 572 also rising. There's such a narrow space between the whole and the upper Keltner channel. It makes me think the odds of a deeper drop are probably more likely than they have been. You can go back and see times like around the middle of May where we were at the upper Keltner channel and the whole moving average crossed over the price, and that marked the beginning of a pullback. It was a buying opportunity. My guess is this will also be a buying opportunity, and we'll see if we stop, probably somewhere between 510 and 530. That would be these two zones here. The only thing I'll note on the VIX is that it's also about to cross over the whole moving average to the upside. So the VIX is also indicating that we might be preparing for a volatility spike in the short term, and surely that would coincide with the market falling somewhat.
Thanks, Sean. Next, let's take a look at GLD, the gold ETF, up 0.89% today, closing at 307.55. GLD has been in a consolidation phase between 300 and 315 over the last 3 months or so. We got a bounce here off of the 50-day EMA, which is currently sitting at 302.97. So the last 3 trading sessions, we've seen a nice pop on GLD. If you've been following our videos for a while now, you know that we actively trade GLD. We actually have a weekly income strategy in one of our portfolios where we sell shorter dated option contracts against longer dated option contracts. And in this case, we were selling the July 3rd 305 puts on GLD. We closed those out this morning, locking in just under $4,000 in profit, and we actually rolled up to a higher strike price. And so even though the volatility has picked up quite a bit over the last few months on GLD, the gamma exposure levels are still pointing to higher strikes. We're seeing the 315 and the 320 strikes as the largest gamma exposure concentrations. We've made a few attempts there up towards that 320 strike, never could quite make it, but the setup here looks pretty solid for a move up back in to testing that 320 level. And so our weekly income strategy aims to take advantage of that, but it doesn't require a big move basically in order to collect premium. And so that's what we're basically trying to do, is ride this trend higher while collecting weekly income. And you guys can follow along with all the trades we're making in our portfolios in real time by becoming a member at geeksoffinance.com. I'll put a link in the description below for you guys to check that out.
One thing we mentioned yesterday, both in our YouTube video and in the newsletter, was that IWM was the only index left that still had quite a bit of space between its current price at that time and the upper Keltner channel, which is also where we saw meaningful GEX at 220. So we were really happy today to see that fulfilled. We saw a sharp spike even in the face of the other indices being flat or down at the time. So IWM had a nice spike up to 220. Rejected almost to the penny and closed still very positive today, but below that GEX cluster. And we're still above this 214.77 hole, so that gives IWM some space. But the upper Keltner channel does not allow very much room overhead to reach 220 or 230. Until the indicators catch up. I've chosen settings for my Keltners that tend to capture most moves, except in the most extreme outlier situations that are very low probability. So, the odds are we probably don't get stray too far from this upper, and maybe we can start a pullback sometime soon now that all of the boxes are checked across the board, with the indices having reached both their upper Keltner channels and the upper dealer cluster zones.
Thanks, Sean. Next, let's take a look at Tesla. Tesla down big today, 5.34%, closing at 371. Tesla is still the victim of headline risk, and we've seen the volatility pick up here over the last few months with the various headlines plaguing the company. This latest move has brought price right down into the big 300 strike. Currently, that's the largest gamma exposure concentration. It's also our lower dealer cluster zone. This has seen a shift lower over the last couple of trading sessions as volatility in the name has picked up. However, we do think there's reasonable support here, and there's actually still an uptrend going on from the beginning of April. So if price is able to hold here, we could see quite a bounce off of that 300 level. We saw a similar picture when price dipped below 300. We saw a really quick bounce a couple of days later, and we were actually able to capture a really nice move in our portfolio off of that bounce. So the possibility is here for a secondary bounce off of this 300 level. We'll have to see how the options volume and the gamma exposure structure comes into play heading into the July 18th expiration, but this is a name that we are actively trading in our portfolio, and we're going to continue trading off of this volatility.
Thanks, Anthony. Let's look at KVUE. This is a spinoff from Johnson & Johnson from a few years ago. They're a healthcare company that has products a lot of people have heard of, like Tylenol. And if anybody held the stock earlier from May until now, they may have needed to take some Tylenol because it's had quite the drop going from 25 down to just below 21. But in all seriousness, looking at the chart, and we'll point out a few things here. The Keltners are in a downtrend, but we are in this lower dealer cluster zone. All of the noticeable GEX clusters are overhead, starting at 23 and even 24. Which is a decent percentage above our current level. The price closed just barely above the whole moving average. And this is the first time in 3 trading sessions, so there's some significance there, even though we rejected from the day's highs. I like that we still closed above that yellow line. And we had volume at higher strikes too. This stock has been a great example of using GEX to make informed decisions, and we can look at the historical GEX chart and you see that GEX has steadily moved positive even at a time when price is moving sideways or down, signaling that participants may be looking for a more positive shift in the near future. So the chart and the GEX picture look positive, and we can go to our 3D graph and we see that most of the GEX is at 23 for September 19's expiry. So we also have meaningful GEX at 24 for September 19. So if I were looking to establish a position in KVUE, my personal plan would be to allow at least enough time to make it to that September expiry, just so you have enough time to see this move higher.
And you can get access to our gamma exposure dashboard, our option flow analytics, as well as our algorithmic trading strategies by heading over to geeksoffinance.com. You can sign up and become a member. Members also get full access to our community Discord. Our Discord community's got a ton of great traders in there, and you can also follow along with our trades as we manage our options portfolios in real time. I'll put links in the description below for you guys to check all of that out. Thanks so much, everybody, for watching, and we'll see you guys in the next video.